Nickel has just been decreed a critical mineral by the federal government in the Green Revolution. But the irony is, most of the Australian production is facing a shutdown as the industry finds itself in a critical condition. The price of the metal has plummeted from a peak of more than $48,000 a tonne in March 2022 to about $16,000 now. The price plunge is linked to Indonesia, which has flooded global markets with cheap nickel that's made under fewer environmental regulations.
The nickel market's roughly a 2.5 million tonne a year industry, and the Indonesians, who were producing hardly anything sort of 7-8 years ago, were 1 million tonnes 2019, and they're pushing, the plans eventually to push towards 4 or 5 million tonnes.
The glut has seen a number of miners go broke or suspend operations since the start of the year. More than 1,000 jobs have been lost. The fallout has even hit Andrew Forrest's Wyloo Metals, barely 6 months after paying $750 million for Mincor Resources and its Kambalda nickel mines. It's placing them into care and maintenance. That's put BHP's operations in jeopardy. It's suspending work at its Kambalda concentrator. Just last November, BHP boss Mike Henry singled out nickel as a key growth area for the world's biggest miner. Now it's considering mothballing its entire Nickel West division, which employs 3,300 workers. The mining giant has written down the value of its Western Australian nickel operations by $2.5 billion and admits it's losing money to maintain them. The industry is now calling for help. With nickel added onto the critical minerals list, companies can access financing under a $4 billion facility, as well as grant programs. The WA government has also delayed some royalty payments for 18 months.
It doesn't really look like at this point that it'll be enough to save anything. And of course, you could go for tax relief as well, but if you're losing earnings, if you've got negative earnings, you haven't got any tax, so it doesn't make any difference.
Pressure is building on federal and state governments to do more to keep what remains of the $4 billion sector afloat.
Now, what's happened in the past 12 months is we've seen a real surge in supply of nickel coming out of Indonesia, and that's taken everybody by surprise, happened more quickly and at lower costs than market participants were expecting. In parallel with that, we've seen a change in the way the exchange operates in respect of nickel, and it's seen that surge in supply out of Indonesia impacting the highest quality nickel that BHP produces, called Class 1 nickel. We think that's going to persist for a period of time, potentially until the end of this decade, at which time we'll see the market come back into balance and things will look more positive for nickel again. Given that this has been a loss-making business for BHP and the degree to which it's loss-making is of course increasing in response to that surge in supply and drop in prices, we are actively considering how we can go about reducing costs within the existing business, and subject to that not being enough to keep the business running or to warrant ongoing investment, then whether we move the business into a period of care and maintenance while preserving the option to bring it back out of from care and maintenance and into production when market dynamics look a bit more positive.
You've stated thousands of jobs are on the line. When will you be able to let the workforce know whether their jobs are safe?
And so this is of course, a key consideration as we look at the path forward for Nickel West. And unfortunately, it does create a period of uncertainty for the 3,000 plus people that are employed at Nickel West, as well as all of those employed by businesses that depend on Nickel West. And so we are taking our communications around this very seriously, and we want to bring certainty to the question as quick as practically possible. But I would note that unlike some other players in the industry who've already moved into care and maintenance because they have a simpler business, we also have smelting a smelter and refinery at Nickel West. In fact, the only nickel smelting and refining capacity in Australia. And there's greater technical considerations in how we would go about moving into care and maintenance and preserve the option to come out of care and maintenance in due course for that sort of operation. So it's something that we have to be very deliberate about. But I acknowledge the uncertainty that this creates for thousands of people, and therefore we're moving this forward at pace, and we'll provide that certainty as soon as we possibly can.
Are you talking to the government about support options for the smelter to keep the operations running?
So there has been a broader industry call for, this isn't BHP specific, a broader industry call for government support. Irrespective of that, given the importance of this business in terms of jobs, in terms of the critical minerals narrative for the nation, we've been engaged with all stakeholders, including both state and federal government, wanting to ensure that they're fully informed as we look at the path forward for the business.
BHP was one of the companies that argued against super profits mining taxes. Is it fair for the industry now to be asking for support to help it through the lean times of the business cycle?
So let me take a step back here. From a BHP perspective, whether it's nickel or other businesses, first and foremost, this is about self-help and operating the business as productively as possible. Unfortunately, the settings here in Australia don't support maximum levels of competitiveness currently. In fact, things have moved a little bit in the other direction in recent times. But what we're saying is, on a standalone basis, we need to take a decision about whether we continue to operate this business or not. And of course, one consequence or one potential path forward, as many others have already taken, is to move the business into care and maintenance. It's important that we're transparent with governments in that regard. And should they, in response to a broader industry push, not a BHP push specifically, a broader industry push to put in place measures to support the industry, then of course that's something that we would consider, but only to the extent that it were to result in a different decision to keep the business running. Now, in addition to the specific nickel question, I would just come back to the broader business performance. This is a business that's performing well. Small part of the business, being nickel, has seen market challenges in the past 12 months, and that's resulted in an impairment and a potential move into care and maintenance. But there's 17 million Australians who depend upon BHP as part of either directly as shareholders or indirectly through the superannuation funds for a successful and high-performing BHP. Part of that is ensuring that we're running the base business well, but also where we do have a loss-making business like Nickel West, that we're prudent about how we go about spending shareholder funds in support of that business. And that creates a real sense of accountability on our part to ensure that we're taking the right decision, taking into account a range of considerations, both shareholder and other stakeholders, and we're in that process as we speak.
The Australian market has been gazumped by cheap carbon-intensive nickel from Indonesia. If governments are serious about the energy transition, should they be putting a price on carbon-intensive nickel?
So this is something where I laud the calls on the part of the federal government for there to be a shift in the way that nickel gets priced globally, and for there to be due recognition of the sustainability credentials of Australian nickel. Unfortunately, for markets to shift in that direction, it requires a change in market mechanisms and a change in behavior on the part of multiple market participants. So it's not something that happens quickly and isn't going to be what resolves the near-term challenges that the industry is facing. But should everyone be leaning into that conversation? Absolutely yes, for the reasons that the outline, and we've been calling for that for some time now.
On iron ore, high inflation has underpinned its price, and despite fears about softening demand from China, that's been holding up. How long will it continue to do so?
So we've had a fifth year running now, in spite of the economic softness in China in the past 12 months, a fifth year running of over 1 billion tons of steel demand and steel production in China, and likely another year ahead of us, again at over 1 billion tons. We do believe that Chinese steel demand has moved into a period of plateauing, and that in the medium to long term, it will move into contraction, which is what we've seen with other major economies as they develop. And it's the reason why we've sought to ensure that our iron ore business is operating as productively as possible and is right at the low end of the cost curve, because we know that competition in that industry is going to heat up in the years ahead. We've successfully established ourselves as the lowest cost major producer of iron ore globally, and we've held that position for a number of years now. And that business is performing really strongly in terms of cost control, as well as in terms of the incremental production that we're unlocking through productivity and a little bit of debottlenecking capital.
Does the iron ore mine in Simandou keep you up at night? How soon could China cut off Australia's iron ore supply if it wants to?
Well, Simandou tons we are forecasting will come to the market in due course, but the volume of coming out from West Simandou and other West African players will be small relative to exports from Australia. So we believe that there's going to be a market for ore from the Pilbara for some time. there has been a debate playing out across the steel industry about how to best to achieve green steel. You'll hear oftentimes DRI referred to. That requires a particularly high grade of iron ore, and only a very small fraction of current production or global resources meet that quality criteria. And therefore, there's a lot of focus now on electric smelter furnace. We announced a project in recent weeks together with BlueScope and Rio Tinto, looking at the potential development of a pilot plant for that to demonstrate the ability for ESF to accommodate Pilbara ores. And that's one of the many efforts that are underway to ensure that the Pilbara, including BHP's business, is well placed to continue to meet global demand for steel, including from, or for iron ore, including from China.
How confident are you the company's pivot towards greater copper production and potash will replace any declines in the iron ore division in coming years?
So I'm confident that we're growing or maturing the growth pipeline both in potash and copper. We have 2 stages of Jansen now underway. That's going between Jansen stage 1 and stage 2. It's going to be the world's largest potash mine. Potash is a fertilizer that's needed for more sustainable agricultural production, and in the face of a growing global population, rising living standards, constraints on arable land, there is going to be an increased focus on how to uplift yield in a sustainable way, and potash is key to that. So we see attractive long-term fundamentals. BHP is well positioned with the best greenfield resource, and we have 2 projects now underway. That's going to be a really attractive business for shareholders long term. In the case of copper, we've consolidated the South Australian copper basin with the acquisition of Oz Minerals. We've unlocked synergies at an even faster pace than we were anticipating. We're now looking at how we grow that consolidated basin to over 500,000 tonnes per annum, even as we continue to mature our growth options in Chile and in the US. So things are definitely looking more positive for us in terms of copper growth now than they were a few years ago, and in potash, where we're developing a very attractive new business.
You've spoken extensively today about consistency of fiscal and regulatory settings to underpin long-term investment decisions. You have butted heads with the federal government over industrial relations. How would you describe your dealings with the government?
So we are always very clear in what we believe policy settings are going to do to the national interest in terms of competitiveness, the ability to maintain existing investments, let alone to grow, to spawn and grow new industries. At all times, we know that we can't just be critical of policies, we have to come forward with better ideas. And we've done that through a paper that we issued recently, looking at the long-term outlook for Australia and some of the headwinds that we face ahead and what needs to happen to ensure that we're able collectively to offset those headwinds and continue to both support and grow standards of living here. As the largest mining company in the world, an Australian success story and an Australian national champion, we believe that we have an accountability to be clear on what's required to continue this fantastic story that we've all participated in past decades. And as the world's need for commodities shifts to different commodities that Australia is less naturally gifted with, what we're calling out is that puts an even greater onus upon us collectively to ensure that we can operate at even higher levels of productivity. And some policies help with that. The federal government effort around skills and migration is a positive in that regard. We believe that some of the industrial relations changes as of late are going to create a drag in terms of costs and productivity.
Mike Henry, good to speak to you.
Thank you.